Hey guys, today we're gonna talk about how much you can afford if you make 100,000 a year. For some reason we took this number, everybody's talking about 100,000. I don't know where it came from, but it's a popular number, so let's use that. I also wanna say one thing, that we're gonna talk about just general numbers, and remember there's always other options available. If you do not make 100,000 or you don't show enough taxes on your enough income on your taxes, there's some other issues. There is always other options. It's not just one way. If you don't make 100,000 or you make 80,000, whatever you make, you have to qualify for a certain amount. Yes, there's banks who limit you on some numbers. There's another banks who don't have a limit and you can borrow much more using alternative financing. So just remember that. But today we're going to talk about just standard income, standard salary, and let's go. Okay, so congratulations, you make 100K. So what bank's gonna do? They will divide that by 12. We're gonna show $8,333 a month of your income. Remember, if you're on W-2, we use your gross income. So in reality, you bring less money home. If you make 100,000, you have to deduct taxes and other expenses. But bank will use the whole amount before any tax deductions. If you are self-employed, we use only net income. Very important. So if you own a company and you pay yourself W-2, but you also have some K-1s and stuff like that, we're gonna use your net income after that. So W-2, gross income, self-employed, net income. Now let's talk about DTIs. A lot of people confused about this. A lot of videos talk about different numbers. I heard 35%, 40, 43, 45. Everybody's talking about different stuff. At this moment, most of the banks will allow you up to 50% of DTI. What DTI is, it's debt to income ratio. It's how much you make, a difference between how much you make and how much you can spend. So in our case, if you make $8,333 a month, 50% of that amount you can spend on mortgage and other expenses you have on your credit report. Just these two things we count. Everything else we do not care. So if you have expenses like insurances, health insurance, car insurance, phone bills, gas and water and bill and everything like that, we do not use them. Bank ignore them as debt. So we only use debt that you have on your credit report. Also really important. So let's say, so we're at 50%, right? The only way it can go down if you're getting a jumbo loan. So jumbo loans are maxed out at 43% DTI. So if you borrow more than a county limit, so each county has its own limits. Let's say in LA County, it's $1,089,000. So if you go above that, it's called a jumbo loan, and banks become more conservative. So they're gonna be using 43% DTI ratio. But let's say if you're buying something under $1 million in LA County, you're gonna be okay with 50% ratio. So just again, remember that, 50%. Make it simple and that it works. Okay, so now let's say we need to calculate your other expenses. So let's say you have $300 car payment and you have $200 on credit cards. So total of $500 a month on your credit. Banks do not care of balances. So you can have a $100,000 car, you have $50,000 on credit debt, they do not care. They only care about minimum payments that shows up on your credit. Even if you pay extra and you want to pay it sooner, that's fine, but we want to show to the bank the minimum amounts that you show. So the less we show, the better DTI you're gonna get. So in our case, it's $500 a month. So this is what we got. So if we take our salary of $8,333, 50% of it is $4,166. This is the amount that we have of 50%. Now we deduct $500 from that. So we have a total amount of $3,666 is what we can spend on mortgage payment, right? So everybody clear that $366 or whatever it is, that's what we're gonna spend. What's included in this payment? So it's mortgage payment, property taxes, insurance, mortgage insurance, if there will be any, and HOA if you're buying a condo. So all that, in our case, cannot be more than $3,666. Okay, now we need to figure out how much down payment we need to put. And that's a little tricky, right? So first thing, like for example, when we're doing a pre-approval for somebody, we ask how much funds are available you can do for down payment. Some people don't have any down payment and we need to find products for that, or somebody has a minimum 3%, 3.5%, or 5, 10, 20%, depends on the situation, right? So if you know how much you want to spend, that's great. If you don't, we can figure it out. And again, it's much easier to just do a free consultation. There will be a link. You can just request it, and then within 20 minutes, the whole thing will take conversation 15, 20 minutes, where our team can do everything, all the breakdowns for you, and find a way how much down payment will you need, or how much you have, what's your comfortable maximum payment you like to spend each month on your mortgage. So all these things we'll be able to check. It's free, it's painless. I would suggest you to do it, even if you're not planning to do now something, but you're planning to do in the future. Just prepare some numbers, it will be really helpful. So let's say in our case, let's do 10% down payment, just as an example. So if we do 10% down, we can go to lbcmortgage.com, our website. If you go to resources and try a calculator. By the way, the website has a lot of useful things, videos and products and explanation about each one. Feel free to browse and educate yourself more. The more you know, the easier the process will be, and nobody can take advantage in this business of you and sell you something you don't need, right? We all for that, more education for people who will know what they're getting into, right? If it's for you or not. So let's say I already did some numbers, so we're not gonna waste time here. So let's say if we do 490,000 with 10% down, interest rate will be 7%. This is what the market offers today. 30-year amortization, meaning the loan will be for 30 years. PMI, since you're putting less than 20% down, we have to get mortgage insurance. And this is something you don't need, but lender makes you get it. And if something goes wrong, basically if person cannot pay for the mortgage insurance will cover the bank, because the bank currently, if you're doing less than 20% down, they feel more risk, so they want you to buy this insurance. So in our case, it's 0.3% that you can plug in here. We can change the date for today. And property taxes, 125%. This is standard for California. Again, each county might be a little different. But if you're in other states like Texas and Florida, property tax will be more, around 2%. So make sure you plug in the right numbers, because we see this mistake a lot, where people go to Zillow and just see, it shows the house they like and it shows your payment will be this. Zillow always mistake all this calculation. So I would suggest, again, talk to a professional, schedule consultation, 10-20 minutes, you'll get all the answers free. Home insurance, also 0.3%. Again, industry standard. Okay, so what do we got? We got 29.33, that's the mortgage payment. So principal and interest. Principal is what we pay down the loan with, and interest is what we pay to the bank. 510 is our property taxes. $122 is our homeowner insurance, and $110 is our mortgage insurance. So our total is $3,677. We had the max of $666, so we're a little bit off by $10, not a big deal. So let's say you buy not for $490, but like for $489,000 with 10% down. So this is what you can afford by making $100K a year. Again, but also want to remind you that this is just an example, right? It seems crazy, right? 100,000 and you buying 490 home. In California, you cannot buy much for 490. I mean, you can still buy it, but not a big home. In other states, you can really buy a beautiful property for this amount. So it's all about where you locate it. Remember, there's other options available. There's always available. There's another 10 products, 10 programs that exist that big banks don't talk about, that Chase or Wells Fargo will deny client because he doesn't show enough tax returns or he has a lot of write-offs. But there's a lot of banks who does these loans. We work with 90 banks, so we have access to pretty much everything on the market. So again, schedule consultation if you want to find out more. And I hope this was helpful to you, and I'll see you next time.